trading desk. Sean, I think the topic I want to talk about here is how to not be the typical retail trader. Again, I think the retail trader, due to the brokerage industry and the financial services industry, has been driven down over the past 20, 30 years. Let's go back to 1982 when we had this anomaly, I'll call it, of a bull market where the market never went down and all you had to do is buy and hold. Mm-hmm. We're in a new world now the last 12, 15 years where we haven't gone anywhere. The Dow crossed 10,000 back in 98, 99, and we're sitting right here at 10,000.
A decade.
2010. So I mean, you're talking 12 years, and I think one of the things I want to talk about is how does the typical retail Joe, who we make fun of on the trading desk, how do we, what is a good way to put themselves into a position to better be active in a market like this? Not overly active like we may trade, but how do you get active in a market where it really isn't going anywhere? How do you position yourself? What do you think are some of the things that people can do to educate themselves and become more a participant and less a pawn of the industry?
Well, there's a lot of good financial material on the web now. And
what sites do you like? I mean, what sites would you recommend that people can learn from? And as far as broader coverage, the Motley Fool has actually done a pretty good job, I think, of educating people. Mm-hmm. But what sites have you used in your short career? And again, anything under a decade is still a short career. But you've put in your hours. You've put in your Malcolm Gladwell 10,000 hours of study. So you've got a lot of background in what's worked for you and what hasn't. So give us a little idea of what you'd like to look at.
There's a lot of financial blogs out there nowadays. One of the general sites I like is findviz.com. Offers a lot of news, offers charts, offers a lot of information on blogs, and I think it's a great way for a retail investor to educate themselves about what's going on in the big picture in the market.
And I think one of the things that the retail investor always gets caught up in is, hey, I've got profits. I don't want to sell it. I don't want to pay the taxes. But I think the reality is, if you're managing your own 401k, your own your SEP, IRA, you've got to take more control in managing these types of vehicles. And these types of sites, as you said, FinViz is a great one. You can go to the site. It's got charts. It's got technicals, news, anything you want to immerse yourself in. Get involved and spend some time and learning this stuff. There is no holy grail when it comes to trading, and your financial professional doesn't know anything more than you do. But I think what we really want to share with the viewers is take control. Understand a little bit more about support and resistance, price levels, things like that. Where are you in the range? Are you up 4 times? You look at some of these small cap stocks, and they've had huge runs.
Yeah.
4 times their price a year ago. Hey, if you've owned them, maybe it's time to take some profits at this point.
Yeah.
So learn to take profits, because it's money that's allocated and available to be put to work somewhere else down the road. And it's opportunity cost. I think that's one thing that I always look at. It doesn't matter where you are with your finances, is do you have money set aside for the next opportunity that comes along?
Yeah.
I mean, would you say that's important? In having cash. Cash is an asset, and we talk about this a lot on the show. Having that available to put to work on an idea or a trade is always something that you should have in your back pocket.
Yeah, cash is a very important asset. Last year, I think a lot of companies were cash starved. And if you had cash and were able to put it to work in the market in March, April, even May, you'd be sitting pretty right now.
Right. Again, 80% just buying the simple index, and there were some definite, simple indicators that I think would have shown you, again, if you weren't trying to ride that down the whole way from 1,500 down to 666, if you had taken cash maybe somewhere along the way, and then there became some points in the charts that looked pretty attractive. So when we come back to the trading desk, we've got a great interview with Tim Dewey, University of Oregon economist and PhD. You're watching the Trading Desk on COTV Channel 11.